So good
Great.
afternoon and good morning to those of you that have joined us from overseas. Today, I think we're talking, we're discussing a really important subject and something that's very topical. So building a better financial future with employee financial wellbeing. So I'm delighted to say that Immedis have joined us today. And Richard Limpkin, the Chief Product Officer of Immedis, is here with us today. So just go on to the next slide, which is just on the housekeeping rules. So just to let you know, today is being live streamed and also being recorded. We do want to make this interactive, so if you do have any questions, please ask those questions in the Q&A box, and Richard will get around to those. If not, we'll answer those post-event. And the slides and recording will be available after today's webinar. So I think that will be over to you then, Richard. So over to you, and let's start today's webinar.
Great, thanks Mel, and thanks everybody for joining. Really looking forward to talking to you today. I'll try and keep to time as much as I can. Loads to talk about. This is, as Mel said, it's a really interesting, really exciting space, and there's a lot of change in what's going on in terms of financial well-being. The first thing I'd caveat is I'm not a financial advisor and I don't pretend to be. So I wouldn't be asking anyone to make any judgments based on anything I say today. What we're really trying to do is help with the education of organizations around the importance of financial well-being and what are some of the things we can do about it. It's something I'm really passionate about personally. I don't mind sharing a little bit about why. I mean, I grew up in a family who ran a small family business. So some of the disciplines that came from that around delayed gratification and making best use of the assets you had and doing the right things and being ready to wait for things to happen. I think they're things that have certainly stood to me, and I think they're things that are really important in this area as well. So happy to talk about those a little bit. I think as well for me that it's an exciting space in my role within Immedis, in that financial well-being has its own place on our product roadmap. It is that important in this sector, in the payroll sector, and in the wider HR arena. So it's something that we really need to be thinking about actively. And it's something that as employers and leaders in industry, we should really be super aware of. So what I'm going to cover today is going through some of what financial well-being is, how it impacts people and organizations both jointly, what we should be doing as employers and leaders around this. We'll look a little bit as well at the impacts and dimensions of this in terms of gender impact and other aspects and dimensions to financial well-being. It's not a one-size-fits-all. It's something you have to be very cognizant of how it applies to different people and how it impacts different people. And we'll also talk a little bit about some of the solutions around financial well-being and support for workers in organizations. So just pushing on from there, when it comes to your finances, ignorance is not bliss. The less you know, the more you pay. I think this holds true not just to finances, but understanding financial aspects of well-being are just fundamentally important. It's not something a society we're great at. So its 2017 study would say that 69% of parents are reluctant to discuss money with their kids. And it's not mandated in schools. Some countries do cover that at school level, but only at a very basic level. So you got to ask the question, if parents are reluctant to talk about it to the children and schools aren't teaching it, who is doing the financial education of the workforce and the future workforce? And that's really what part of this is about today, is understanding what that is and how we can go about it. So let's start off with what financial well-being is. It's about having the confidence to manage your money, taking day-to-day expenses into account, planning for the future, but also a fundamental part of it is planning for the surprises. And life is full of them, they do happen. So that's a big part of this as well, and putting all of those pieces together as part of an overall puzzle so that you've got the capability to understand and manage your financial well-being and all the different aspects and strings that pull on that throughout life and the different stages of that, helping people to understand what that is and how to manage it. So another way of looking at that is, this is very opinion-based, but confidence comes from knowledge. Knowledge removes the unknowns, and fear and stress generally can often come from the unknown. So a big piece of financial well-being is finance understanding, education, and the other aspects of that. Let's look a little bit about employee and financial well-being generally. So what are the leading causes of stress? Well, finance, interestingly, is one of them, and it's probably one of the most significant ones. 54% say that finance or money concerns are the major cause of stress, not one of the most significant cause of their stress. So that's why this is so topical. More than half of the people in the workforce have this as their primary source of stress, not the role they're in, not the environment they're in, not the work they do, but the financial aspects of their work and home life. So it is fundamentally important to address that. We'll talk a little bit later on about the impact of those stress factors and what they really mean and how they impact people. But there's some really, I suppose, really quite divisive stats on this in terms of people's ability to live day to day, in terms of their paycheck, how that impacts things, in terms of debt and how people look at debt, and what that impact is. And again, all opinion based, but I think one of the more frightening ones is actually the longer term impact of this. So like a statistic that 56% of people have less than 10K saved for when they retire. Now that's not sufficient for anyone into retirement. So that's something that we need to be able to help address, and how do we deal with that is a big part of this. There's an urgency coming into this in terms of how society behaves, and a big factor on this is the kind of socio-economic piece in terms of immediacy, in terms of not delaying getting something and having immediate access to everything. So actually matching off assets and liabilities and doing that in a prudent way is something that we're, as a society, we're generally getting worse at, and this is partly a generational thing as well. And then again, if you look at student loans, having the education and the support to get through education, how many of those courses that people have sat, that the loans have helped to support, actually contain components of financial well-being and management into the future? So again, an important piece of how we put all of this together. And we're going to talk as well about what the role of the employer is in all of this. So employers and financial well-being, why does it matter? Well, there's a huge impact, a massive impact on the financial stress. Now, these figures are from the US. So simply put, like the estimated impact on US businesses annually of financial stress in the workplace is equivalent to the GDP of Belgium. Like, that's not a small number. That's the lost income at national level just in the US. So this clearly has an impact not just on the employee, but also massively on the employer and our organizations that we're trying to operate and run successfully across the world. Now, the types of impacts this has, and this isn't a new concept. This goes back, like, as far as you could argue probably the 1940s. Maslow introduced his hierarchy of human needs, and two of the fundamental aspects of that he talked about were safety and psychological safety, followed by, and these are all foundational things that built on each other. Without the foundations there, the other pieces couldn't work: belonging, esteem, and self-actualization. So without those foundational components there, and it's very easy to kind of link the fact that financial well-being, having the appropriate income, managing that well, links to being able to put a roof over your head, food on the table, being able to pay for things that are required to get you to the workplace, all those components. So it's easy to understand how these things have become, they've always been there, but they've become more and more relevant in the workplace, and how managing them means that other things can be successful as well. So really not much has changed. Like, humans aren't a new thing. We've been around a long time, but the environment has changed. And that's why financial well-being is becoming such a heated topic and such an important factor for businesses to look into and to understand and to put structures around. So it's in terms of where the responsibility lies, maybe moving on slightly from there, it's actually interesting that all the research is showing that employers are very aware that they have a responsibility in that, in terms of structuring financial well-being for their workforce. But also, if you take a step back and say it's not just a responsibility, it's actually just common sense, it's good practice. If this has such a profound impact, both at a commercial level on an organization, but at a personal level on the employees and staff, why would you not be actively addressing this? The awareness is certainly there. Employers feel the responsibility, and the research is saying that. They believe that the tools being put in place will support the workforce to do the right things. And we'll look a little bit on the impact of that in a minute. But it clearly has a big impact on the effectiveness of our teams. So whatever Maslow said around this, apologies for the slides, whatever Maslow said around this 80 years ago, it seems that most employers and employees agree with this as well today. So this, again, it's nothing new. It's clearly a global focus on the long-term aspects of saving and retirement are important. There is legislative work on this. If you look at what's happened in even more recent years, over the last 5 years at least, around things like auto-enrollment, or similar concepts where people are encouraged to put aside for future over a much longer term in a way that's supported by the employer, matched contributions, all those types of things. The UK did a lot of work on this. Denmark, Georgia, Ireland will be introducing this, Lithuania, Poland, Thailand. They're all countries that are actually prominently working on this, which is a really positive step. But that saving for retirement is only one small aspect of overall financial well-being. So given there's a clear employer understanding of this and a desire to do it, then the next statistic is a really interesting one. Why is it that only 23% of companies are engaged in it actively? If it's that important, and we all recognize it's that important, there's not enough action being taken to address it. And I think this is something that we're all involved in the wider payroll environment. We all have the potential to be able to impact this within our own organizations and to be able to drive for all the benefits that come for addressing financial well-being for the workforce. That alleviation of stress, getting people to a much more effective mode of operating. When that stress component is taken away, whether it's financial stress or otherwise, but finance being the bigger factor of that, once that's taken away, people are much more enabled to engage in what it is they're trying to achieve and what their role is all about. That engagement, retention, those things that are eating away at people are much better serviced when these things are addressed and when the right structures and processes are there to support people doing it. Productivity, and this links back to the 500 million in GDP impact. Like, this is something that can notably be impacted in every organization. Productivity of individuals, when that stress component isn't eating away at them and when they're not distracted and concerned with managing financial aspects of their well-being, is going to have a notable impact on how the business performs and how the individuals manage things. So in terms of how we can address this, what can we do as employers? What can we do as organizations to support people through financial well-being? So in terms of what we're going to talk about, one key aspect as payroll professionals is start with the payslip. Payslip is the one touch point for every employee that they're consistently provided with on whatever the periodicity is, whether it's monthly, weekly, fortnightly, or even quarterly. It's the one thing that is there, and it's the one thing that clearly links to their income. So being able to start with that payslip in mind and being able to use that as a tool to communicate with the employee and to centralize those finance aspects of their well-being around it is a really important point. So starting off by understanding their income position, remembering that this is around timing, and quite often that financial stress can come from mismatch in timing of income and outgoings. So again, we'll touch on later on in terms of immediate pay and other aspects of payday components that can help positively impact that if appropriate. But that timing aspect is really important. Getting them the insight around the payslip is really important as well. It's not just gross and net components, but for the individual to actually understand at a granular level what all of the payslip means, what all the components mean, how the tax and social components of that, what the implications of those are, and how to be really effective with the distribution of what they're putting aside, how they're contributing to 401k or pension, and what's the more effective way of doing that. There's a big component of that as well. So using that singular point is a really key initial starting point for having effective communication around financial well-being with the employee. It's also an opportunity to introduce other communications and insight into the employee environment for payday. So things like the employee understanding how much they can actually contribute to the pension, how many of the employees in your workforce actually genuinely understand the level to which they can contribute to future savings, the different aspects of benefit schemes that are available to them, and how they can get involved in those. So that's a big piece of it in terms of providing employee insight focused around the payslip. and all the supporting structures that we'll talk about in a little bit that go with that as well, in terms of providing them with additional information, ongoing education, and almost lifetime learning around their finance aspects of their lives, which do evolve. People, as I said earlier, it's not a one size fits all. People have different needs depending on the stage of the career they're at, depending on their location, and lots of other dimensions as well. So using that payslip as a linkage point is really quite important. We're all able to make bad choices as well. And quite often bad choices are made because we don't have the right information or we're given the wrong guidance. So actually having access to as many sources of knowledge around this as possible for the employee is really important. Getting in independent financial advisors to help them with planning, to help them understand, even down to the basics of managing their outgoings and looking at where their income goes. They're all important things that as an employer, we can have mass effect on. It doesn't take a huge amount of effort to get those structures in place to actually be able to noticeably impact a very large amount of population in our teams. So there's a lot that can be done there. That payday engagement piece as well, in terms of just understanding what the employee choices are. A lot of what's happening with individual finance is around making choices, and it's about helping people make the right choices. So that payday engagement is really fundamental in that piece. Education to employees, again, in my opinion, I think this is a really important aspect of it. It's difficult for people to be open around financial stress. It's a difficult topic for people to talk about. So having the education there within the organization to let people know what support is there, what are the things that aren't even necessarily support structures? These are just normal things to do, to talk to somebody about your outgoings, to talk to people about your retirement planning, to talk to people about other aspects of how you manage your finances. These shouldn't be seen as exceptional things. These should be seen as totally run-of-the-mill, day-to-day things that we should be doing. We should be talking to different sources. We should be talking to lots of different external advisors that can help with this kind of stuff, and it's all easy enough to put in place as an organization, as an employer. There's obviously a global aspect to that, and a big piece of this is that you've got to make sure that the appropriate mechanisms are in place depending on what jurisdictions you're operating in, and what's appropriate within the tax structures in each of those jurisdictions. But things like employee assistance programs, they're able to provide the help for people who are in difficulty. But again, managing the change effectively is really important. Just letting people know once through a single comms that that's there isn't necessarily effective. You've got to make sure that that's continually reiterated and that that's championed across an organization to get the right help in place for people. Making sure they have access to that on an ongoing basis and all the other benefits that come with that, as well as external advice, is really, really key. So that educational key piece is really important. So as an employer, think back to, if we're not, as parents, educating kids, if kids are not learning financial well-being and managing their own finances in school, the next logical place for that to fit in, to be able to address it at scale, is in the workplace, and to be able to provide that around the employee. And that's really where the education in the workplace and the company benefits is really important. So making sure that's open and transparent to everybody and doing that in a really, really proactive way. In terms of what the employee really wants, and this is a really, really key point, particularly for larger organizations, there won't be one answer to this. There'll be a multitude of different things that people will be interested in. But probably the key thing to focus on first of all is that 40% of people or more do want help with financial planning. That's proactively seeking help with this. So this is something that that's the starting point. That's for people actually reaching out and wanting this. So this is to a degree an open door in terms of being able to help people. There's a lot of factors that kick into this, in terms of people's appetite to risk, in terms of their educational background, the role they're in. And as well, we'll talk about the gender impact of this in a few minutes as well. So lots of different aspects, but generally speaking, people are open to support. And the key thing with this is that it is a long-term thing. Getting people to a good place isn't an overnight thing. It's something that you can impact in small ways quickly and progressively, and continue to support them on as they go through their careers. So this is an important part of any corporate plan in terms of HR policy and how to support people long-term. Other things to consider as well would be generational impact. So this is partly down to people's stage in career. But what's really interesting about this piece is if you take a step back and look at the three different generations on display here, the needs are all in and around the same thing. So it's very much around managing somewhere to live, managing their debt, and having some degree of savings. So the components are the same, it's just the prioritization is slightly different. And being able to support people in making the right prioritized choices is a really important part of this. And I think, again, that touches back to people understanding, for example, that if they invest something in a retirement plan early in their career, investing $1 could be worth as much as $5 when they get to retirement. Whereas if they do that in their last or penultimate year of work, then they're not going to get the return on it. So sometimes how people prioritize isn't in their best interests. And quite often that's because they don't have the support and the education to understand from a finance perspective, what are the right things to do? And sometimes the right choices are the hard choices. It's not always as simple as that. So that's a big piece of this, understanding where people are in their careers and how we can positively impact the choices they make as they progress through those careers. Gender and how that impacts. So there is a very, very clear split in terms of the workplace, in terms of gender pay equality, and not to confuse that with pay equity. But it's very clear, and the research is showing that women are more impacted by financial stress than men. It's also it also does appear anecdotally that there's more financial prudence than there would be with men, and I suppose I'm putting links in place that aren't necessarily there, but I suspect the two things are not unrelated. That by being more prudent and trying to drive for better financial control does actually potentially put some more stress on being able to achieve that. So there could be a link there, it may be a tenuous one, but it's not coincidence that the next 2 points are on the same page. In terms of the gender pay gap, women often earning less than their male counterparts, and the likelihood of women leaving the workplace, these two are clearly linked. If you think of a single family situation with two incomes, and there's a lot of people during COVID that are reconsidering their circumstance in terms of two people in the workplace or not, in terms of childcare and other aspects. If there's a choice to be made, it's a much more difficult choice if there's inequity or lack of parity within the incomes. There's certainly less likely to be a fair choice in that, and it's much more to be an entirely financially driven choice than it possibly should be. So remember that parity and equity piece and the graph at the bottom is very interesting in terms of that is continuing to split, even though there's a positive upwards trend in terms of people's ability to manage their short-term impact of debt. Apart from a blip in 2019, there's a positive upward trend. There is an increasing divide between the male and female ability to manage that. And just think of the impact of that. So that's like the statistic would be around 40% of Americans would be unable to cover a $400 unexpected expense. That could be a car breakdown. It could be a problem with the roof in a home. It could be something as simple as that. It could be the vehicle that gets you to the workplace. And an inability to cover that short-term financial need is an incredibly stressful thing for somebody to deal with. And we'll talk a little bit around also the split of income and wealth from a US perspective, especially, but more globally as well. So being aware of the impact of that and being aware of what that will do to people's choices around career and that type of life decision is really important, because if we understand it better and we educate better, then we can help to make the right choices and we help people to make those choices. So in terms of the World Economic Forum research, and there's some really interesting statistics out of this. There's certainly a lot of information that would say there are countries that are very strong on this, and there's a correlation, a very high correlation between how well they're managing the gender pay gap to how well they're managing other aspects of gender parity. And the top countries in the world on gender parity currently, and there's a significant trend here, are Iceland, Norway, Finland, and Sweden. So a very Nordic slant in terms of how politics are managed, how gender pay is managed, and the degree of parity. And when I say parity, I mean how aligned fairness is across male and female in the workplace and other aspects of life. Effectively, from the World Economic Forum, they look at a number of dimensions in terms of politics, lifestyle, well-being, finances, and other aspects to come up with a parity index. Now, this is showing generally that actually the countries that are better at this are accelerating away from others. So the top is strong and getting stronger, and the middle isn't really doing a huge amount, and the lower ends of the spectrum are getting worse, getting parity into the workplace. So again, something to be really aware of. This isn't a simple thing that is easily addressed in one jurisdiction. There's a huge disparity across the globe in terms of how these things impact. And therefore, as an employer, how we should look at putting the financial well-being aspects of employment in place. So we have to make sure that they're appropriate for the jurisdictions we're operating in, and that they're also aligned, if possible, globally as well. How has COVID impacted this? It has had a significant impact. There's been a further hit because of it, and effectively what's happened is there's a melting pot of new conditions applied on top of potentially already stressful environments. If people were under financial stress or were struggling with financial well-being, then those new stress levers are not helping. And there are those decisions being made as to whether two people stay in the workplace or not. What you'll see straight away from this side is there's a massive slant to the right. What does that really mean? It's effectively women in the workplace that are making the tougher choices around leaving work and having to do that. Again, it's very likely linked back to if there's two incomes in the family, then it's probably more affordable to lose one if it is the lower income. So there is an aspect of that, and that's why gender pay equality is having an impact on financial well-being, slightly more so for females in the workplace than males. They're not necessarily getting the right voice at the table or being able to make a fair choice and decision based on the circumstance of the joint family unit. So these are things that we should be looking at as well. And the obvious things are around people needing to support looking after kids, schools not being open, childcare being less available, those types of things, as well as people switching from full-time to part-time roles, possibly for the same reasons. So a lot of things to consider there. They've all had an impact, and the lack of parity across gender pay has certainly meant that that's an underlying cause for the slant to the right in this area. In terms of what we can do to support financial well-being, technology can play a big part of this. Having access to data and all the evidence is there that the organizations that use data to inform decision-making and to drive better decision-making are much more agile and are much more able to put the right things in place based on facts, and also able to test hypotheses and see, is it the right thing to do? What's the impact likely to be, and how can we best positively impact the workplace by doing so? So what we've certainly seen and what we've been able to do ourselves in terms of our own technology is look at where there has been really positive traction and drive in terms of financial well-being, in terms of gender pay equality reporting, whether that's from a legislative point of view or just from a customer practice point of view, and actually take some of the best components of that are localized and apply them at a more global scale. So being able to understand gender pay equity across the globe, but also being able to look at things like age bias towards salary distribution and being able to look at those aspects as well, and giving our customers the tools to be able to do that really, really proactively, even where it's not legislated. And these are things that are becoming, again, more and more common. There are a number of jurisdictions that have made a really prominent step forward in this. UK is one of them in terms of statuting how these things are reported, even down to the level of the calculation that's applied and making sure that it's absolutely fair to measure. So that decision-making platform and the ability to make decisions based on the right data in a really timely fashion is very empowering for an organization. And that can help elevate the whole payroll function to being a much more strategic component in the HR arena, being able to drive HR decision-making at the top table based on real data and facts and trends at a global scale. It's hugely important for all of us working in the payroll environment. So let's look a little bit now, maybe, I think we have a question, I think, Mel, now, do we?
Yes, we do. So just on mute there. Okay, so let's launch the first poll question. So let's do that now. Does your organisation currently have a financial wellbeing programme in place? Yes, we have full programme in place. Yes, but it only covers a limited number of areas. No, there is no programme in place. Not sure. So I always try and get 75% of you to answer this one. So no pressure, guys. But if you could all tell us your results or your answer, that'd be fantastic. So we'll give that a few more minutes. Some interesting stats there, Richard. Some slightly depressing. As a
Yeah, so some a lot more depressing than others, but yeah, and some very, very localized as well. There's a huge disparity globally in terms of how these things are applied, and that kind of spread, which you can see in like the World Economic Forum do a huge amount of work on trying to normalize that to understand where there's a real impact and where there needs to be things addressed. So it's useful to try and apply that information with stuff you see at a more local level as well.
Yeah. Oh, it's good. It's good to know, and it's, you know, we need to speak about stuff like that. Right. So we're just going to give it a couple more seconds. If somebody else can answer, please, that'd be fantastic. What do you think is going to be the top answer on this one, Richard? Before we launch it,
I would say probably I would guess at around 50-ish% would have something in place in limited areas.
Okay. Right, so I'm going to end the poll now. Thank you for everyone that answered that. And I'm going to share the results now. Can you see the results?
Way less. Yeah, 50%, just over 50% have something or have something significant in place.
Yeah, interesting.
Very good.
Okay, so I'm going to stop sharing now. Thank you.
So that to me feels like we've got a much more informed group on this session than a lot of the research and stats would tell us. So that's got to be a positive step forward anyway. Okay, so having a look at some of the things that we can do potentially, and some of the things that are coming either in place in some jurisdictions or coming to actually help support with these types of challenges, financial well-being aspects. And again, just remember that this isn't a one size fits all. This isn't something that is necessarily appropriate for everybody, and it's certainly more of a jurisdictional thing. But let's talk for a second about the concept of on-demand pay. It's really topical in payroll at the moment. There are solutions out there for it. It is something that is being progressed on roadmaps, and it's something that's in place in some jurisdictions much more commonly than others. But what is it? It's effectively the employee being able to draw down on their pay packet earlier than payday traditionally. Not necessarily everything up front, things in a controlled way, up to a certain amount at the discretion of the employer, in chunks or timings that are all part of that scheme setup, but effectively giving people access in certain circumstances to early pay. Why would you do that? Well, this is much more common in the Americas. It's becoming an increasingly standard model in the Americas. It's by no means legislated or mandated at all. Why is that? Well, if you look at the spread of wealth in the US, about 10% of the entire population controls 70% of the wealth. So in many ways, there's the huge proportion of the US population are in that category that are unable to manage with an unexpected financial hit of some kind. And that ability to deal with it, this is a potential solution for it. Now, there's all sorts of different philosophies on this as to whether it's a good thing or a bad thing. Again, in my opinion, always open to challenge. It's a good thing if it's part of a wider financial wellbeing program, but just in isolation, giving access to early pay is just bringing those vulnerable people closer to a cliff edge and shortening their ability to manage it. But if you address that as part of an overall financial wellbeing component where they're actually getting the educational and support aspects of it and trying to reduce the need and the draw at the same time, then that can be a really positive thing. I was on a panel recently with senior reward specialists from a global hotel chain, and their opinion was that this was absolutely inappropriate for their workplace, but they could absolutely see value for it elsewhere. So it's very much regionalized at the moment, but it is coming, and it is something that's increasingly present. The other thing that I've certainly seen from a technology point of view is alternative pay mechanisms. So not necessarily just drawing down cash early, but actually being able to enhance the pay packet through getting other voucher type payments. So for example, if you always do your you're grocery shopping at Whole Foods or Tesco or SuperValu or wherever, then you can actually get for an equivalent amount an increased voucher amount with that provider through certain forums. So that's a way to actually get the employee more without actually having any negative impact on them, without having a negative impact on the employer at all. So there's a lot of investment in technology in that space as well, and that's something that I see as a component of on-demand pay, but through a different rail. So that's something that's a really exciting space of HR and payroll tech, and it is coming quickly. So why do we need this? Well, again, that disparity in wealth in the regions that it's present is really significant. And it's understanding, again, that you've got to understand the full demographic of your workforce to know whether this type of thing is relevant. And also, particularly for global organizations, this can provide a significant challenge in that something that's really appropriate for one jurisdiction and is not for another can provide policy challenges in terms of equity across the globe, in terms of full reward programs that are fair and balanced at a global scale. It's got to be considered that that's not always the case. You've got to sometimes put things in place that are localized and need to address a certain issue in a certain jurisdiction. There's also a lot of work done, again, UK has been really prominent in driving this around, rather than minimum wage, living wage, and actually signing up as an employer that provides a living wage. So these are initiatives that we will see more and more of, because they're driven by the right types of behavior, and they can have a really significant impact on people's financial well-being. All important aspects to consider. Other things to really be aware of, and this is slightly connected to on-demand pay, slightly different at the same time. There's a huge amount of the global population that can't get access to a bank account, known as unbanked employees. Now, that's for a number of different reasons, but one of the most common reasons is they actually don't have the minimum requirements funding-wise to get a bank account. So in that situation, you have people potentially who are paid through check or other less data-driven mechanisms, and are then having to factor that check to be taxed upon taxed income to actually be able to get the cash to live from. So this is stuff that is, again, being partially addressed by next generation banking, by people entering into that space and being able to get people onto a banking infrastructure that's the less classical bank infrastructure, and give them the ability to manage their finances in a more modern way without needing the regional requirements around entry. So a big part of it, and something really, really important to factor in as well. And again, very, very regionalized. In terms of the benefits, the employee and the employer both, let's talk about that a little bit, I think. So in terms of the on-demand pay, where can it really benefit the employee? It's really dealing with timing. And timing is so important in every aspect of financial well-being. As I said earlier, the stress factor can often come from a mismatch of timing in terms of having income ready versus outgoings going out. And as the whole society moves much more to a subscription model in everything we do, that timing becomes increasingly important. So on-demand pay allows the employee to be much more in command of the timing of their income, and deal with the stresses of that finance piece as and when appropriate. But one really significant positive for the employee that's introduced by on-demand pay is the ability to actually move away from payday loan infrastructure. And for any of you who've seen the adverts that pop up on TV for payday loans, if you read the small print, which I tend to, the numbers are terrifying in terms of the equivalent annual interest rates. So if you were to take a payday loan for, as the example is on the screen, for $500, and you didn't pay that back for 12 months, you'd end up paying back nearly $2,000. And that's just a typical interest rate. That's actually lower than I've seen on many of them. So this is something that, again, if people aren't aware of this, they see it as a short-term thing, and they think they'll get it paid back. As soon as they don't, that increasingly spirals out of control. So giving people the right support and education to understand that if they're mismatching what they're taking the loan for versus what it's to pay for, and there's no end in sight to that, it's not a good thing at all. And that can very quickly get people into trouble, much more so than credit card debt, which again is a high interest rate, but nothing even close to payday loans. So that is where there's a really positive influence of introduction of a new method of payment, which is potentially eliminating something quite crippling to the individual. So definitely worth consideration there. In terms of the benefits to the employer, And this is really, again, this is a US driven stat, but nearly 60%, nearly 2/3 of employers are actively engaged in seeking out solutions for this. So it's not something that's just on the shelf and being kind of investigated loosely. It is something that is coming, and it's something we need to be hyper aware of. It certainly has a massively positive impact. As we saw earlier, the negative impact of stress, this has to have a positive impact on productivity and engagement. Absenteeism is actually something I didn't touch on earlier. That can be, financial components can be a massive drive towards absenteeism. And again, that in itself drives lack of productivity and cost in an organization. Turnover in relation to employee retention, again, massively positive impacts. If you provide this as something to the employee and they've got a better structure around them in terms of overall financial well-being, with this as one aspect of a structured program, then they're going to feel in a much stronger place, and their affinity towards you as the employer is going to be a huge amount stronger. So those alternative pay models can be a significant differentiator in terms of giving people access and variety to how they deploy their income, both in terms of the timing, but in terms of the things they can do with it and how they can actually enhance their net pay through these types of alternative rails. That's going to have an increasingly positive influence. Again, it's a little bit challenging as an early stage technology, because the access to be able to do that at a global scale is a little bit challenging, and having the right access to different components that match across different jurisdictions is still a relatively immature market, but it's certainly growing very quickly. And again, at the moment, it's a little bit more of an Americas driven market, but we're starting to see those solutions more and more in Western Europe, and they're becoming more and more relevant. So finally, the whole gig economy piece, unbanked workers, those alternative payment rails, and it's something we as a payroll solution are actively engaged in on a constant basis, finding the most effective new rails, both in terms of time to pay, inability and flexibility on the rail, but in terms of access for a wide variety of staff as well. That's something we're constantly driving towards, and we're seeing more and more need for. There's a lot of, we've probably all heard about challenger banks and what they're doing to disrupt the classic banking market. It's probably important to be aware that the classic banks do have a legacy infrastructural debt that is very hard to solve, whereas the new entrant banks are much more able to execute quickly and to give access in a less risky way to more people. In terms of the key takeaways, the really most important thing is start with the basics. Understand the positioning of the payslip with the employee, understand the organizational benefits of putting a financial well-being program in place. And when you look at the numbers and you just go back to pure business case stuff on this, it just makes sense. The impact of not having this in place or having financial stress within any of the workforce is not really worth carrying. So there are so many things that you can do. There are so many organizations externally and independents that can help support put these in place, whether that's from healthcare providers, whether it's financial organizations and institutes. The support is there, and it's easy to bring them in to help people. Making that part of a wider corporate change program and really driving that is fundamentally important as well. It's not just to send a communication out and then people know it's available to them. It's got to be a really proactive approach and being championed by individuals throughout the organization. So making sure you consider that localization aspect as well. Everything from job to location to stage of career through to gender, all of those fit into the dynamic of what you need to put in place and how you need to consider the bigger spectrum of this. And then consider those on-demand aspects as well, and how that may be a solution in some of your jurisdictions to help people and to put the right structures in place. But the most fundamental takeaway from all of this, I would suggest, is giving people the right access to knowledge to make more informed choices and to support them even where having the knowledge isn't enough and they're in a difficult situation, to help them get that initial start on the right trajectory with that knowledge. Thanks very much for your time. I've tried to go at a reasonable pace to get through everything, so hopefully we're okay for time out.
Sorry, I was on mute. I think that's like the saying, isn't it, of 2020. We did actually have a question from somebody, and it's quite strange actually, because we were talking about this last week about sort of the monthly pay, and you know, it's very old. The idea of monthly pay is an old idea. So do you think it would be beneficial to give employees a choice what pay cycle they wish to be on, weekly, bi-weekly, 4-weekly? What's your thoughts on that?
Yeah, I've actually seen some of that. I've saw it in a private organisation a few years back now. It was relatively easy to administer once set up, but I would kind of counter and say the on-demand pay is actually, it's going even further on that spectrum. It's actually giving the employee almost complete freedom of choice, whilst at the same time allowing the employer to just run one pay cycle. So rather than having to administer all those different cycles and maybe having some people on and off them as they choose, you're running one. And then the immediacy of the on-demand pay means the employee is just drawing down within reason, within the rules and constraints you put in place. So it kind of gives you the best of both worlds, I think, in that regard.
Oh, can you hear me okay?
Yeah.
You can, sorry. My
Yeah, no, you're good, Mel.
a bit funny. So it's all technology. Every time I have run a webinar, there's always something technology wrong. And we have actually got another poll question, if that's okay, if we can just quickly run that before everyone leaves. And it'd be quite interesting to find out where people are at with this. Does your organisation currently offer an on-demand pay? So yes, we offer on-demand pay. Yes, but only in certain locations. No, but we have plans to implement. No, and no plans to implement. So just be interested to see what people come back with this, because it's such a topical subject at the moment. I think I've been talking about it with yourselves and other payroll professionals over the last sort of 6 to 7 months, really. And I think, you know, the depressing news of potential redundancies in the UK for a lot of employees, I think on-demand pay is a really important subject for us to be talking about.
Yeah, it definitely is, Mel, and it's in terms of tech investment, in terms of access to technology to underpin this, and it is a very tech-led space, because if you don't do it from a tech perspective, as to the previous question, it becomes a real administrative overhead. But if you do it in the right way, it doesn't need to be. So that's something that has opened up massively, and it is something that can be, you know, as I said earlier, it can be really positive for individuals, but you've got to balance that. You've got to make sure the right support and structure and financial wellbeing programs more generally are there to help as well. I saw some really impressive stuff done a couple of years back by a customer who actually looked at what was happening in the UK with auto enrollment, and they said, well, look, sooner or later, it's been done for the right reason. Sooner or later, it's going to hit our other jurisdictions as well. So actually, let's just get ahead of it and implement something similar to that under our own steam now for the whole global population. And that was it. That was a huge success. And that actually, what was really interesting is that they were quite a young demographic. Their average employee age was certainly under 30, and their uptake was on the younger spectrum. So they were able to actually implement long-term savings stuff proactively without legislation, and actually have it impact the people who were least likely. All the research would tell you were least likely to take you up on it.
It's interesting. Well, I'm going to end the poll now. So here are the results. Hopefully you can see those. Yes, we offer on-demand pay. Yes, but only in certain locations. No, but we have plans to implement. No, and no plans to implement. So what's your thoughts on those, on that result?
Yeah, I'm not surprised at all. I still think there's a long way to go with this. It's very regionalized, and I think if you could probably split that demographic in terms of where the respondents are based or headquartered, as to whether there's an immediacy and a need to do that from a US centric perspective or a Western European perspective, APAC, etc. Definitely less uptake in Western Europe currently for this.
Yeah, but I feel, my gut feeling is, with so many trends that I've seen over the last 10, 15 years, that if we run this poll in 2 years' time, the answers would be very different.
Yeah, I think so. I really do. I think that everything we're seeing in terms of the right, not necessarily the right things, but certainly those trends where they do kick in and where there's uptake, particularly in global organizations, they tend to spread horizontally, and they tend to be put into place, even if the uptake will be initially small in a jurisdiction, in terms of having a broad scheme that fits everybody, or is available at least to everybody. That's where these things tend to spread in the global organizations.
Okay, before we go, if anybody does have any questions, but we've got a couple. Are you seeing more organisations utilising gender pay gap analysis outside of those countries where it's a legislative requirement?
Yeah, we definitely are. Most of our customers utilize that to some degree, if not fully globally. They're certainly using it outside of the legislative jurisdictions. So yeah, that's absolutely good. It's good to see it. It's a really positive step to see it. And we're also seeing that go beyond just pure gender pay. It's also, we're seeing that used more and more for age bias as well. And I think we'll actually see, from a legislative perspective, we'll see way more on age bias coming in. I suspect probably Western European driven initially, but it's certainly on the way.
What's the best piece of financial advice you were given that you always come back to when you think about the whole area of financial well-being?
I was fairly blessed early on in my career. A great mentor that like as a 20-year-old starting work in a big four in London and knowing nothing about my own finances, I was kind of given the best advice I was given was patience. Was just actually being helped to understand the long-term nature, and that you've got to just be patient, and like it's about having time in the market rather than timing the market, if that makes sense. So just thinking ahead, planning carefully, and they were the kind of things that I got great advice on. And I'm not quite sure why I listened at the time, but it seemed to resonate with me, and I did. And I think that's the best advice I'd give anyone, certainly early in their career, is just get an understanding of that. Like Harvard did, loads of people will be familiar with this, did a study with kids and marshmallows, and just teaching kids that if you wait, if you don't eat the thing immediately, then the long-term benefit is you'll have more of them, and eventually you'll have more of them than you can eat. So like that kind of stuff is really, really important. I did an experiment with my kids recently enough, actually, on something similar. Like they were all given a small amount of money from their grandmother for Halloween, and I tried to get, rather than going straight to the sweet shop and buying a packet of sweets, I got them to leave it with me for a few weeks and kind of giving them a concept of the interest rate. One wouldn't have any of it. They had to be taken to the shop immediately. One of them was kind of begrudgingly did it because the eldest did, and then she still has it invested and she's living off the interest now. So it's kind of getting that into kids early so they can understand it. Like I think that's really important, that patience, and just not spending instantly on stuff that you don't actually necessarily need is really important.
I think if somebody had used the food scenario with me, it would have sunk in a bit earlier, but anyway, especially the sweets. But thank you so much, Richard. Before everyone goes, once you finish or you leave this webinar, there will be a link that comes up. We're working with Immedis on a survey which we run every year. It's global payroll set to impact the bigger business picture. It gives us great insight, and you guys, it gives you great insight of what's actually happening within the payroll industry and with the providers, and what's actually happening, or what's good and bad for you guys. So if you can fill that in, I would be very grateful. The link will come up straight away at the end of this webinar. But thank you once again. If you do want to get in touch with Richard, Richard, is everyone okay to contact you via LinkedIn? Or?
Yeah, absolutely. Please do. Happy to talk to anyone.
Well, a great subject, a really important subject as well. So thank you for sharing your knowledge on this, and I look forward to seeing you soon.
Thanks ever so much, Mel, and thanks everyone for your time. Take care.
Thank you. Bye.
Bye-bye.